Welcome to TMS Insight. It's August 22, which means it's reporting season. This is the first of two updates on the Australian profit reporting season that we'll bring to you. Before we get into the results, which is really what we want to talk about, Ben, it'd be just unbelievable not to comment on the market performance, which I would describe as a melt up since the nadir of mid-June, where we saw headlines and fear, and a lot of those headlines still remain, but the market's just moved up. I've calculated it's gone up, the Australian market 11% in the 2 months since that low point on June 16. US markets have gone up more, but again, it reminds what we tell clients about when you see those nasty headlines. You almost got to buy rather than sell, and they're trying to tell you to sell. But you've got to be fighting
trying to scare you out of the market, and markets have done what markets always do. But I think you want to be probably a little bit more cautious now,
right?
Because it's all inflation, right?
Now you do,
now you
not
do.
then,
and we'll get to results, but results generally have been strong.
Well, I think this is the same thing the US found.
And the US as well.
It was a lack of negatives almost. And why are we all so bearish? They've suddenly became, and no, we shouldn't be. So it's all these relativities, aren't they? That's the thing.
That's right.
But I like also what you said too. Doesn't mean now's the time to get outrightly bullish. We're still positive. We've seen these numbers. They're coming through. But if there's nothing nasty there, why is everybody so negative?
There's going to be so much riding on this next inflation print in America, if that again,
and the one after that,
and the one after that. But if we do start to see a sign that it is trending lower, which
that was the finding of the last week's result. You did actually record no inflation for the month of July. Which meant that markets cheered, and that was the macro reason why.
That was the catalyst,
and that helped the market go further. But let's get into results. They're the most important thing we want to talk about today. One of the ones that comes up early for us, we always like talking about this stock. It almost always delivers. REA Group, Ben, through good markets of property, bad markets, this company is doing exactly what it's always done, and it's going really well.
It's a sensational result in a very difficult environment. You've got to think about the impact that lockdowns had on the property market and volumes. The fourth quarter actually saw growth in listing volumes, which they didn't expect. The CEO said even as of sort of April, May, they weren't expecting to see that. They're guiding for a continued strength in listings, and then they'll be starting to cycle that really frenetic period coming out of lockdowns and probably going negative there. But it's just such a consistent business. There's levers that they can pull during the tough times and the good times to make sure that they've got the positive jaws that they always talk about. And I think
and that for everybody's benefit is keeping your costs under control, which COVID really helped them. They lowered their costs in COVID, and we know earnings bump up and down all the time in the revenue cycle. But like you said, those jaws are widening in the margins.
That's right, and that's what the analysts always look for in that stock is your cost expense to be growing at a lower rate than your revenue.
And that's one business that can do that. And it demonstrated that consistently. So we really do like that. It has improved its share price notably. It deserved to. Let's talk about a related business in some ways, Seek, because we always love talking about this one too, and it does almost always sells down post a result.
It's incredible.
And it's up a day later or something like that. But and it's usually for the same reason. They're reinvesting in the business. They're not producing today's high numbers, and they're not telling you about nonsense of forecasting the next short period of earnings. So long term, it's doing exactly what it was always planned to do, and again, they were good numbers, Ben.
Very strong numbers. I mean, you do have to remember they were cycling against a particularly weak period, so you've got to, lockdowns. A lot of employers weren't hiring at that time, but the job ads on the website. I think there was 1 month where there was 530,000 job listings went onto the the platform, and that has come back a bit. Ian Narev, I actually thought he gave a great presentation. So there's a real handing over of the baton there from Andrew Bassett to Narev, who was very upbeat and impressive on the core. So that the minor negative the market didn't like, but we would always sort of say you got to look through these things, is that they're in the process of bringing all of their global platforms onto one platform, which is the ANZ platform. And that's a huge technological challenge. And, there's things, Narev was saying, normally when you see the words technological transformation run a mile, because it often blows out and goes wrong. But they're well through it. It's going well, and it's going so well that they've actually said, we've decided we're going to, while the hood's up on the car, we're going to finish the third piece of work, which we weren't sure if we should be trying to take on at the same time. It's going to be an extra $50 million in expense, but it will mean that their growth outlook accelerates faster. So, great result, and quite a bullish outlook, which a lot of CEOs haven't been willing to do.
And he knows his stuff. I mean, he's a great get for seek, isn't he, really? So the next one we want to focus on, ResMed, again, I mean, this was...
great numbers.
And in a market where we may not have expected the continuation of their recent good times to continue, in an oligopoly market they operate in, sometimes it's a bit of give and take with competition, isn't it? So you've got to expect some catch up from your competitors, but their ascendancy remains.
Yeah, and Mick Farrell, on the call is great. A couple of little things I took on from the call. Mick said it's the first time in the company's history, he's been there for 30 odd years, that every single CPAP machine that is coming out of their manufacturing plant is already sold to a patient and being sent straight to them. He said, we've never actually seen that before. It highlights the issue that ResMed have at the moment, which they actually can't keep up with the demand because of all the supply chain issues. The other thing he said was that he believes Philips, which own Respironics, which had this big recall, are going to be at least another year out of the market. That's longer than most analysts were expecting. So that's another good thing for ResMed.
Yeah.
So it's just trying to get those supply chains humming so that they can take advantage of this period. But great stock.
It really does. And even though they've had problems, it's just dwarfed by what Philips are having. And
it's huge.
It's amazing that COVID's grown the gap between the players. That's really what it seems to have done.
Yeah.
Not so good was Magellan, and probably as much as the numbers, more out the outlook, and again, probably well known and understood by the market, but they're in a tough time at the moment, Ben.
Definitely, and it's quite extraordinary, the upheaval that's from a personnel point of view that's happened in this company. I remember listening to Hamish Douglas doing a podcast with an American investment manager and talking about what the next 10 years of Magellan were going to look like. And he was clearly trying to create an Australian BlackRock and was well on his way down that path. And, the fact that he's no longer, it's incredible.
Sea change,
It's amazing. Yeah. I feel that the new CEO I thought was good. He was the deputy
George,
head of the Future Fund. He knows the industry backwards. They've just got to get that performance turning around.
And that's the only thing he said.
That's all that matters.
So watch this space. I think there's probably all we can say at this point. They've got to deliver on that.
Looks cheap, but it's cheap for a reason.
Correct.
Yeah.
Goodman Group, cracking result. Share price has moderated a fair bit in the last year. Again, COVID was basically good for it, but they're showing capacity issues in a way too.
They are. Incredible. I mean, so Greg Goodman's been running this company for 20 plus years.
Yeah.
He said that, just to put in perspective, Goodman own or manage $73 billion of industrial asset property around the world. And he said for the first time in our history, not one of those properties is available for rent. They are all completely fully tenanted. And of the $8 billion in properties that they're developing and will have coming online in the next 12 months, 70% of those are already had a tenant commit.
So you want to be acting pretty quickly if you need a little bit of space.
It's extraordinary.
And this speaks to the broader economy, which is strong. And again, this is not just Australia; it's global. But it's really capacity constraint issues. Probably one of the biggest challenges. But Goodman's very investable still.
I think so. I think this is one of the ones I thought was a really bullish presentation. Yeah. Obviously, interest rates have pulled back the share price because they should pull back valuations. Yep. But that won't last forever, and eventually this will overtake that.
The only major bank to report its full year results in this period is CommBank. It was an outstanding set of numbers in what were expected to be challenging or moderately challenging times. Again, that just showed how it's dominant in that big four. Yep. The others are playing games like ANZ, buying Suncorp and what have you, Bank, but CommBank's franchise is very strong.
It's the premier bank.
Yeah.
It looks a mile more expensive than the other three, and it always warrants it. When you get to the results, it's just the difference in quality. We saw a downgrade from Bendigo during the reporting season. And what seems to be happening very quickly to me, loan growth has really dropped off with the housing market. The banks are fighting between each other for share, and margins are coming under a bit of pressure as a result.
Yeah.
But it's the big guys that win out of that.
That's right.
It's not the little ones, because they just don't have that flexibility.
It's the pricing power, and it's the market strength, isn't it? Let's have a look. Challenger again. So we're talking about the banking side. They're trying to get out of that.
Yeah.
Market didn't like it. It was an interesting one.
Well, I don't really blame. This was frustrating because they came in at the top end of guidance, and they've guided for quite solid growth in the year coming. These guys are an interest rate winner. Higher rates is good for the business. The previous CEO bought this little bank for $30 million. He had a view of creating a one-stop platform for financial services, and the new CEO...
She's never worked in Australia anywhere, really.
No, and in hindsight you do question it, and they're probably going to go and sell it. Yeah. It's a small amount of money, but it's frustrating.
It's strategy that the market's confused.
Just when the business is showing signs of turning, exactly. But it looked like an overreaction to me at the same time in terms of how the market... It's bounced back quite heavily since.
BHP's had a busy period, it divested its energy assets there, and they became Woodside shares for people. I was surprised how well the market greeted the result. It was a very good result, very good result. I was surprised the market was positively surprised.
Completely, yeah.
But they almost got the whole Mike Henry story, I think, in this reporting period. So comments on that result?
I just think when you looked at it, you sort of thought resources companies have got a lot of stuff that's outside of their control.
Yeah.
What's in their control, they are controlling incredibly well.
Yeah.
And the dividend was a surprise. They upped the payout ratio. So
unlike Rio, which
cut it.
Yeah.
And
but that alone wasn't it. I think strategy, like we were talking about Challenger there, they liked the clear enunciation of strategy as well, and the market rallied on the back of that news. So.
You would say though, like offloading those coal assets over the last few years has cost them a lot of money.
Yeah, again, that's right.
You think what the result would have looked like if they'd hung on to them.
Absolutely. Couple quickly, CSL was, it's doing its thing.
Yeah.
And again, a reminder, sold down quite heavily the first day. 3 days later, it's well above where it was pre.
Yeah.
Now, there's nothing to change our very positive view on this company.
No, it's for me the premier quality business on the Australian market. Yeah. It's so consistent. Through COVID, everyone sort of thought, it's going to be a winner because of the vaccines and stuff. It actually went to hell and back in terms of what was thrown at it with plasma collections, having to pay more, people not wanting to donate blood in America. Everything went against them, and they still have managed to eke out reasonable growth.
Yeah.
And then, the CEO's calling out a return to very strong growth, plus the Vifor numbers, which he hasn't given the market yet what to expect. But that is potentially the next pillar for CSL after Securus and Behring before that. So
these big businesses that they build up over a few years and they become just behemoths earnings-wise within. They've done it many times, so they're very good. Car sales, just quickly, good numbers there. So we're pretty happy with. I mean, that's going really well. Some positive COVID impacts and then normalisation.
Big US acquisition, market seems to like.
South Korea is going very well for them. So I mean, it's looking good.
Yeah.
Lastly, just one that we might be wanting to get people interested in. Auckland Airport, Ben.
Yeah.
And I know you did a little trip there to Queenstown to check on the airport, which is good.
With you.
With me. And it's one of their assets, of course. But no, as COVID comes back and this, particularly the Auckland Airport with the land assets there, it did have to raise capital during COVID. It's been extremely quiet. Sydney Airport's no longer. There are very few infrastructure assets available listed on the market now.
Yeah.
AIA, Ben.
This is the buy, because the volumes are still ramping up, and there will be a lag where you're still running a high cost base.
Yeah.
And it takes time for the revenue to start overtaking those costs. They're at about 75% of capacity now, but we know travel is just going berserk, and 2023 is going to be huge. It's probably the biggest year of travel globally, I would have thought. Yeah. And, the unique thing with Auckland Airport is if you fly into Sydney from anywhere in the world, you can fly into Perth, Brisbane, Melbourne or Sydney. In New Zealand, it is the sole gateway internationally into the country. So if you want to go to New Zealand, you have to go through Auckland Airport. Queenstown's got a little international airport owned by AIA.
Yes, so you're getting exposure either way there.
Yeah.
And I think the thing to just let people know, Auckland City Council owns 18%, so you just don't go and walk in and take over this company. So we want that in a way, as much as we've seen Atlas Arteria undertake it, was Sydney Airport taking over, already gone. Duet,
Spark,
one of your favourites. They've gone, they're not here anymore.
No.
So we love companies being taken over. We make money for clients when that happens. But what's better is longer term growth, because we've got to then go and find new things. This one could be around for a long time. I don't think Auckland City Council will have any interest in the very long foreseeable future to sell. So.
No. And I think there's an Indigenous group as well, a Maori group, which would probably be reluctant as well. But the other thing with AIA, they own a lot of excess land around the airport.
That's property development opportunities.
Yeah, industrial, we've just been talking about Goodman.
Righto, we've held you a bit longer today, but there's been a lot to talk about in reporting season. We're going to be back with a second video for you all at the end of reporting season.